Hi, welcome to the video day. It's the 6th of August, it's Sunday. In today's video we're going to be looking at trading trend reversals with low risk and high potential profit. Now, in terms of the pair that I want to look at today, it's Euro JPY. We've seen fairly messy price action in this pair in recent weeks, but I think it's getting ready for a big reversal to the downside. The risk reward looks really attractive. I'm going to sum up the big fundamentals, the sentiment towards them, the key technical levels to watch out for. We're going to go over to the chart in just a moment, but just before we do so, if you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, including the one we're going to look at right now, just go to the link beneath this video and you can get live access to our member center. You can also join our free mailing list, follow us on Facebook, and finally join our Facebook group of traders. Right, let's go and take a look at the opportunity. Right, we're on chart of Euro JPY. I'm going to draw my levels of entry, stop and target in a moment. Now, it's been pretty scrappy price action in this pair recently, but I think that could all change with a big move to the downside. So I'll draw my levels of entry, stop and target in a moment. I just want to go through some points. Now, if we look at the euro driving higher on the JPY here, okay, that was to do with interest rate perceptions. You had the market very optimistic the ECB would be really hawkish, and we've had a dovish Bank of Japan for 3 decades, so the only dovish central bank. So basically that drove the euro higher. Now we've got a bit of uncertainty coming in as prices chop higher then lower. Why? The bullish backdrop I think has peaked, and in terms of why it's peaked, I just want to show you some charts. Bond markets give an idea of interest rate perceptions going forward. This is the US 30-year bond against the Japanese 30-year bond. Look at the yield go up, okay, soaring to the upside. If we look at a shorter dated bond, 10-year, you can see we've broken above the level where the Bank of Japan would normally cap yields, i.e. keep interest rates low. It's gone through the level, could go even higher. Just going to read this quote from Nordea because it's relevant. After 3 decades of ultra-loose policy, the Bank of Japan desires an orderly transition to monetary policy normalization. Japanese 10-year yield currently stands at 0.64, with the Bank of Japan intervening twice over the past week to slow the rise. I think that's all they're going to do. More upside in Japanese yield should be expected in the time to come, which in turn will contribute to higher global long-term yields as Japanese pension funds repatriate capital back home. So in short, interest rates are rising, okay, via the bond market. Now on the other side, I'm going to show you, this is the ECB interest rate hikes as the market sees them. 3.75, they expect to move to 4 and then cutting of rates. Now, I did a video on Euro USD earlier on. I do not think the ECB will raise rates again. If they do, it's in the price. They will be cutting, okay? So what does that mean? Well, it means that the interest rate differential in favour of the euro is peaking out, okay? Highly significant. Now, in terms of just going back to my chart, what's my next point? Speculators are heavily long of the euro in the cash, futures and options markets, okay? Now, in terms of this, I'll just show you one chart, which will be here. This shows how the market is positioned in terms of longs and shorts against the USD. So we can work out how long they are by just doing what I've done on this chart. Massive long in the euro, second only to the Mexican peso. Look at the Japanese yen short, okay? Heavily short. So you've got speculators heavily long the euro, heavily short the JPY. So I think they're going to get taken out the market on stop. Right, in terms of other things in favour of the yen, long-term capital flows favour Japan. Japanese hold the most capital overseas of any country. They've got massive holdings, both individuals and corporations, as yields start to rise in Japan and fall in other countries. That money will come back to Japan and boost the Japanese yen. It's a really big long-term fundamental. Japanese v EU economy. Looked at the EU economy earlier in the day when I did my Euro USD video. It's going into recession, a long and deep one. Okay, Japanese economy is not doing great, but it's doing far better than the EU economy. What else? We've got risk on in the markets to turn to risk off. That would favour the JPY. We've got risk on in the markets. If that continues, I still see the yen going up, but if it goes to risk off, then that traditionally helps the yen. Okay, so I think we are right for a turn. Right, levels of entry, stop and target. Now in terms of the euro, obviously there's a really big move up here, then we start to really accelerate, and that is where interest rate differentials peak in our view. Now what I mean by that is the market was expecting 3 rate hikes from the ECB. Okay, now we did come off and we came back up to test the level. We came into the ECB and then on the ECB day we fell back. ECB delivered 1 rate hike, possibly 1 more to come, so down to 2. We think they're probably not going to hike again, but that is the peak in terms of interest rate differentials in the market's view. So you had a lot of resistance there, couldn't quite take it out here either. This rally back after the ECB, double tops, and we've come back a bit. I think there's 2 ways of playing this trade. Okay, so if you go up towards the double top, look for topping action and sell with a stop behind the big 158 level. What about if we don't go to the upside? Okay, just going to draw that line in there. Basically you can see why you had a little poke up at the double top, couldn't do it, finish red. Okay, then this Friday's blue is nondescript. You could sell a break lower. You'd use a different stop if you do so, in my view. So you've got basically, I think, support there, which is basically almost on the low of Thursday. It's just below the round number. So I'd let that low and the round number give way, 156. That is going to be, yeah, I'd go 155.70. Okay, so basically take a break lower, then your stop could be behind this double top here. Now we're looking for a big move down. We've got a lot of speculators long. In terms of the way the speculators are long and how big their holdings are, I think you could easily see a break back to here. So basically the 151 level. So that would be the first target. Where would the second target be? I think we're looking for a big trend change, so I think we could go down to 148. So plenty of downside potential. Yeah, if we break lower, stop should hopefully get run. Nice risk to reward. Obviously, like I said, you can take a rally into that first level resistance as well. It's been choppy, messy price action, but I think it's, for us, it's hard to see the euro breaking above 158. Of course, anything can happen in forex markets, but I think we're getting ready for a big break to the downside. So that's our view of euro JPY. I hope you found it useful.